Vistra announced their earnings, and I wanted to take a look at their earnings report and update my analysis on this company. Now, Vistra is part of the whole AI community of stocks, and Vistra is supposed to benefit by the increased demand of electricity by these data centers that are going to be providing the compute and all the services for AI. Now, I agree that AI is interesting, but boy, AI stocks are really selling off because I think the market's beginning to doubt the fact that there are businesses that are making money in AI. And a lot of the players, including some of the most valuable companies on the stock market, are being sold off. And I think the market's telling them, you better start putting up some revenue that relates to AI and some profits, or we will sell off your stocks because we think you're taking too much of a risk with this new unproven paradigm of computing. So let's take a look at Vistra and see how their earnings look and what I expect out of this stock. I'll update my valuation on Vistra and share with you what I plan to do with this stock. Am I going to buy or am I going to sell? And what is my price target on Vistra? So overall, the business is expanding. These guys are a utility, and for them to expand overall operating revenues from 14.7 billion to 17.2 billion is quite an accomplishment for a utility. That looks really good. And their net income did expand from 1.3 billion up to 2.4 billion. Now, utilities I've never liked as an investment. They just require too much capex to go back into the business. It really takes away from that free cash flow that I really like to have in order for me to value a company. In the case of Vistra, their cash flows were about even. Their operating cash flow actually went down by about $900 million, but their capex was a little lighter by about 400 billion. Net net, it did go down. Cash flow from operations went down. Free cash flow from 2023 to 2024 did go down. But I think that they can probably expand their free cash flow to some extent. And I will use these numbers from 2024 on my valuation that I use free cash flow on. Now, Vistra over the last 5 years has gone up 500%. And really, it's over the last 2 years. That's an incredible rise for a utility. And I think the story that really propped up the company is that AI is going to require all this power. And I think at some point it's probably going to require more power, but I just don't think it's going to be very immediate. The company is benefiting from a higher stock price, and investors who did invest in the company a couple of years ago have certainly been rewarded. The market cap of the company is 44 billion. Revenue is 17.2 billion. Their forward PE is 17. It's a strong buy according to analysts, and it's discounted by 24. Over the last year, it's up 166%, but it has really started a sell-off, a pretty steep one. A lot of volatility in the stock. I think investors are scared, and they're really getting out of the stock. Today, the stock went down 12%. Wow, what a sell-off. And that's because I think the story around AI has gotten old, and investors have grown impatient, and they want to see results. They just don't want to hear the story over and over again. When we look at their revenue growth, it is very good revenue growth, especially for a utility. But when we look at their margins, if you guys watch my videos, you know I love big margins. And in the case of these guys, they have a profit margin of 14%, which isn't bad for a utility. Free cash flow, 14%. That's good as well, but it's a utility. Their free cash flow for the year is 2.4 billion. Looks good. I'll use that in my valuation. So again, I don't like utilities to begin with, but this one is looking good for a utility. When we look at the forecast of earnings per share, analysts are very optimistic that this company is going to be able to have good pricing on their power and sell it to commercial customers. There's an analyst out there that believes the stock is worth $202. And then there are some analysts that are bears with the stock price of $82. So overall, on average, they think the stock is being discounted by 24%. Now, this company is going to continue to grow. I think they are expanding the capacity to generate electricity. And I think they're expecting that they can raise prices as well. So that is going to create some growth for them. But you see that they're going to hit a wall in a couple of years and kind of plateau and not be able to grow much then. I think that'll be a problem for a stock that has gone up 500% over the last couple of years. If a stock goes up 500%, I would assume that investors are expecting growth, true growth, double digit, up in the 20s, 30s, 40s for some time. And you can see that the growth is really going to decline as soon as 1 year from now. So that would be concerning if I was a stockholder of Vistra, which I'm not. And their earnings per share is going to expand to $7.23. Nicely done, up 26%. And then it'll expand again. They're becoming more profitable. That is very positive. Their forward PE is going to come down over time. And that's where I would expect it. Historically, utilities have very low PEs because they're undesirable as a long term investment. They just don't appreciate a whole lot. This is an exception. This is a unicorn utility company. Never seen it. And I've covered utilities for a while, never been an investor, but this is really a unicorn like stock. I updated my valuation of Vistra, which I value companies based on free cash flows and then earnings per share. Using free cash flows, the company is being priced 25% too high with a premium. And I get there because I used their most recent cash flows and actually grew it by 10% for the next full 12 months. And the first 4 years, I'm growing by 10%. Then after that, growing by 4%. That establishes a value of all those cash flows of 49 billion. I add cash on the balance sheet and take away debt, and it gives me an equity value in the company. That's what I believe the company's worth based on the free cash flows they have and then the cash and debt balance on the balance sheet. And you can see that it's priced a little too high based on cash flows. In fact, my price target on Vistra is $97 per share, but shares are being traded for $130. So it's priced 25% too high. When I look at earnings per share using the earnings per share that I expected here in 2025, I get to a 23% premium. So it's consistent across the board. And I think the stock is priced up 25%. Now, I gave them a very generous and optimistic forecast on cash. I thought about reducing the growth in years 3 and 4 because they are supposed to start growing by like 2% in year 3. But I'll just keep it there to make it optimistic. At this point, it's already being sold at a premium. If I change that, it would just create a larger premium. So what should I do with Vistra? Well, I am not buying any shares of Vistra. In fact, I'm quite surprised that the stock has gotten to the levels that it has. So therefore, I would sell Vistra. It is just too expensive a stock. It has now become a super risky stock. If you look at the volatility we've seen in the stock here in 2025, and now the erosion of the AI story, I think a lot of stocks are going to lose value. Some stocks really have great intrinsic value and they have really good technologies. For example, Nvidia, they have the world's best GPUs, and it's a technology that they have, and they get great margins, great free cash flows overall. Well, if Nvidia is being sold off, a utility is probably going to get really, really reduced in stock price, is my opinion. I think it's going to be a really risky stock going forward. So I'm going to stay away from Vistra. It is not a buy for me. It's actually a sell, and it's being priced 25% too high. So, what are super investors doing with Vistra? Well, 5 investors did invest in the company, but more recently, all the transactions have been sell transactions. $75 million of stock has been sold in Vistra. So, these are super investors, not necessarily, I don't take their actions as gospel, but it is an influence on what's happening with a stock. If a stock is seeing a lot of inflows from these professional investors, then that's a bullish signal. But if we're seeing a lot of sells, that's a bearish signal. So overall, the writing's on the wall that the AI story has gotten a little old and stocks are beginning to be sold off that are part of the AI complex. So that is my video on Vistra. And I hope that you found it interesting. Please don't take it as financial advice. Don't take it as any recommendation that you buy, hold, or sell Vistra. It's not that at all. I'm just sharing with you my opinion and what I plan to do with my portfolio. I really appreciate you watching Vistra, and good luck with your investments.